Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants, and author of the books on the tax-free cash growth warehouse strategy. Most people who have any knowledge about life insurance know that cash value and whole life insurance has a cash value component, and that the cash value accumulates over time, and that the owner of the policy may take policy loans against the cash value. But that's about as far as that knowledge goes for most people. In this video, I'm going to fill in the gaping holes in that knowledge base and show you how really wonderful whole life can be, and how you can take advantage of and really benefit for the rest of your whole life from the very special asset that whole life insurance truly is. First, let me clear up one major misconception. The category of cash value permanent life insurance includes both whole life and universal life insurance. But the category and designations of cash value and permanent really should be reserved only for whole life. That's because universal life insurance in all its variations is really a hybrid term insurance product. Universal products are built on a term chassis with some riders built in that contribute to a measure of cash value accumulation. But with universal products, those added components have ongoing fees that do not contribute to the cash value accumulation, and actually will, over time, along with the ever-increasing mortality costs, completely consume all the cash value and even cause the policy to lapse. It happens far too often. Therefore, universal life insurance is neither truly a permanent or cash value insurance. One of the biggest selling points that agents like to promote about universal life is the living benefits aspect that is included with the policy. That is not unique to universal life. The same living benefits are included with whole life and even many term policies. What those living benefits are is, if the insured becomes disabled or contracts a catastrophic illness that is terminal, they can collect 90% of the death benefit to help pay for medical care, or really whatever they want to spend it on. So from here on, I will be talking about whole life only. With all whole life products, there is included a cash value component that earns a guaranteed compounding interest rate. Typically, that is from 3% to 5% annual percentage rate, which is considerably higher than any bank savings account these days. And there are participating whole life policies that receive the guaranteed APR plus dividends. These participating policies are provided by mutual insurance companies. So if you have the available option to buy your policy from one of those mutual providers, that is definitely the way to go. Current dividend interest rates are from 5 to 6% compounding. In addition, with whole life products, there are optional riders, which greatly and rapidly increase the cash value and growth of the cash value. Having these special riders designed into the policy is a big advantage to the owner of the policy for a few reasons. And here's where we get into how you can greatly benefit for your entire whole life from especially a well-designed whole life insurance policy. First, realize that the cash value growth in whole life policies is tax exempt. As long as those gains are not surrendered from the policy, they will never be taxed. They aren't even reported to the IRS. So the way to take advantage of that cash value is to take policy loans. Loans aren't taxed either. So you have the benefit of having your cash wealth grow with high dividend interest, while you can at the same time leverage that cash by means of a policy loan. With the right insurance company, the interest charged for policy loans will be less than the dividend interest paid into your cash value. And policy loan interest is simple interest, where the dividend interest paid to your cash value is compounding. So you always come out ahead, even if the loan interest is at the same rate as the dividend interest. Now, in addition to that, policy loans have no restrictions or penalties. They don't even have a repayment requirement. That means you can pay back your policy loans at any amount and at any intervals you choose. I really want to do justice in describing all the fantastic benefits that whole life insurance provides, but I also want to keep this presentation here short and sweet. So I'm not going to go into details here. I want to encourage you to watch our free webinar, How to Become Master of Your Financial World, which explains the tax-free cash growth warehouse strategy in detail and is only about 1 hour in length, 62 minutes to be exact. Just click the link in the description box below this video to watch it. Since the cash value grows exempt from taxes and is not reported, no matter how much your cash value asset grows, it does not affect your qualifying for student loans or Social Security benefits or even Medicaid benefits. It's basically off the radar. And again, you can use the cash value for anything you want by taking policy loans. So just imagine, you can take policy loans as often as you want, use the money to finance things or even invest, while the money in your account continues to grow tax-free. You could save all the opportunity costs you pay by paying cash for things. And you can save all the financing fees you pay when using bank financing or credit cards. That will save you tons of money, while at the same time, you're growing your wealth with compounding interest tax-free. And of course, it's life insurance. So you have the peace of mind knowing that your loved ones will be cared for financially when you do eventually die. If you like what you've learned here in this video, please subscribe to this channel. Also, post your comments and questions here. Go ahead and click the link in the description box below and watch the webinar now. We're here to help, and we look forward to helping you. For now, aloha and mahalo for watching.